Okay, so with crypto falling, we want to do a quick analysis on where we're at in the market cycle. We have flipped some recession indicators, so that is something to keep in mind. And we kind of want to look and see how things could play out, give you a couple of different scenarios, and we'll see what we can do. Start on the 4 hours, so the daily. We look to be bottoming out as far as selling pressure. We're at the bottom of the RSI, so I do expect to climb back up. Moving into the maybe $64,000 range on Monday, so I expect a bullish cross here and move up the channel. Now, where we want to look at is, let's look at the daily. So, on the daily chart, even though we probably have a relief rally, I expect this to bottom. And, I do expect ultimately us to move up, move down midweek to 57, really. So, it'll be a higher low from the previous low. And we can kind of see this kind of easing momentum and a sharp move back up in the daily. And so if you are going to sell, I would wait for this RSI to come back up. So these still have to cross on the daily and come back up. So maybe in a couple weeks to consider that. We'll see. I mean, we're at the bottom of the channel. So the short-term selling pressures probably over with a little relief rally on Monday, another dip, and then we'll see where we go. So from a macro level bull perspective, this is the weekly chart. And there's some things to consider. I mean, this is bullish, this is bearish, this cross is bearish. We're losing momentum on the downward pressure. And so you can kind of see this and how long this is taking. We'll expect this to double cross above the band and continue up for a time. Also, this is all selling pressure. This is reduced capacity to sell. Once these reduces capacity to sell, these cross and resurge back up. And that's like the end of the bull. And this is the weekly chart. So that's what I would think about as far as this weekly macro cycle and, where we're at. You can see that this is bull market to bull market, and so I do expect to push up. Now, that being said, if these bands continue to move down, this could be a year long. So this could have been a premature pump. This could be a year long downside move before a pump up. And I don't expect massive downside. Like, I do expect, because the price of mining a Bitcoin is about $53,000, and not many people will be selling at that level. And so I expect us to come back down to these levels next bear market. Which means that we are parabolic from here, and we could pump to 150, we could pump to 250. That would probably be my top. But it will be a potential challenge, and I can't tell if we have two potential scenarios. One being that this is just a mid-cycle pump. So this was similar to 2019. We had a little pump, came back down, and then the real bull market was at the end of next year, end of the following year. So that could be one scenario. So that means we grind down for September, October, November, December, March, January, February, March. So 7 months of grinding down, right? Because we just breached previous highs. And this is, breaching previous highs of 2017 and 19, right? Grind down, pump, 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 surge, parabolic. And this could play out like this. Like, say we do go into a recession. Recessions are like 10 months. And so you get grind down, pump, 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 right? And this pump could be the new administration, whoever it is, pumping back up the markets, right? So after there's been a deflationary event, everybody collapses to the dollar. We pump the dollar, pump all investments, and export the inflation to other countries. So, and that could be late 2025. So it's just something to keep aware of as far as patterns and trends go. This could be a mimic of this. That being said, we could also be here, and we expect to move up here. If we are in the grind down moment, I would say the bottom is like $40,000 range, right? So grind down, pump, 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 150, 250. And the indicators to watch is like the pi cycle. And you're watching for these two moving averages to cross. The pi cycle top in here. And we haven't even reached that point yet. Especially since with the price grinding down, you're having the widening of these bands, which means the bull market lasts longer. So realistically, we could be here, and we have this to kind of work through. Let the bands widen again, and then get another top when they compress. So this, it was narrow. This is the mid-cycle bump. And then they expanded back again, only to compress again. Way expanded. And then we could be in a narrowing. And if this continues down to like the $40,000 level, it'll get a rewidening in our bull market probably isn't over until late 2025. That would be consistent with what the power law model which says we really aren't supposed to come back up until place the bottom at like 40,000, right? And then we pump back up, and the green line is this is 2025. Is so we expect our top right here. And the mirror potentially is this 2019 mid-cycle bump. And, you know, where we go from here, it's either these two, right? So you see this 2017 where we went above the trend line, below the trend line, above the center line, and shot. So pop, 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 right? Touch the trend line, below the trend line, aggressive pop. That being said, this could be right here, zipper down and touch the 40,000 before we pop back up to the 150, 250 range. So we'll see. My plan is just to hold and see where we're at. Thanks for listening.